Hey, everybody. Welcome to the Chapter 3 case. Um, so because this is our first time really doing a case assignment, I'm going to do a walkthrough of the case assignment to help you in case you get stuck. In the future, you'll be expected to be able to do these cases on your own. They're sort of kind of like a quiz where you prove what you've learned during the chapter. So you'll notice that there's still steps given to you in the book, but with less detail so that you have to sort of go and do it on your own. So um, I am in chapter 3 cases. We always use case 1 in this course. So we're going to use case 1. When you start chapter 3 cases, it's going to give you a few steps. 1, open your internet browser. 2, log into your, or to go to QuickBooks Online. And then 3, to log into your account. So you're actually using your case file, the one we created back at the beginning of the course. So in case 1, it says our company is a distributor of surfboards located in La Jolla, California. The company does not collect sales tax as all of its customers are resellers. And they ask us to leave industry text box blank. We began business in 2023 and we want to use QuickBooks Online starting January 1st, 2024. So because of the dating on this book, it's like we're in the future a little bit. So our beginning balances will be as of 12/31/23. Don't let the dates, the fact that they're in the future, freak you out at all. All right. So I'm just going to go through the steps. And like I said, in the future, you'll have to do this on your own, but I'll go through them now for you. So as I did before, I'm gonna switch to business view. I think a lot of these things seem to work better in business view. Um, and well, like I said, it seems to fit the examples in the book more. All right. So step 1, it wants us to modify our settings. So to do that, I'm going to go to the little gear icon and I'm going to go to accountant settings. All right. And it says modify the company name to case 01 student name. I already did that back in chapter 1. So and the ID number, but we don't need to use our ID numbers here. So I'm just going to leave this as case 01. And you can do the same thing, and then your name. And then company type, modify the tax form by selecting 1120, which again, they had me do back in chapter 1. So I'm good there. You can just check, and if you're in line with that, then you're good. B, sales, we're going to turn on track inventory quantity. And let's see, my track inventory quantity on hand is already on. If it wasn't, I could just hit the little pencil there and switch it on. Okay, so that's already on. C, expenses. So we're going to go to the expenses tab. And let's see, track expenses by customer is off. So here I am actually going to edit this, turn on track expenses and items by customer. So let's switch that on. 2, we'll turn on make expenses and items billable. So I will turn that on. And then it says no markup, track billable expenses and items as income in a single account and no sales tax charged. So that is set right. Track billable expenses in a single account. We're not going to click sales tax. And then under expenses, we're also going to look at our, let's see. Is default bill payment terms set to net 30. And we're going to turn on use purchase orders. So purchase orders is already on. And with no custom fields. So we're not going to turn on custom fields. And then, oh, there's our default bill payment terms. I clicked off of it, net 30. All right, so that's all of C, expenses. D, under payments, no changes. E, under advanced. Now this is something weird that I thought the textbook would have fixed. They've added to QuickBooks this time tab where things like time tracking and that are included. And so what used to be under advanced is now under time. So when it says advanced and then time tracking, we're just going to go let's see, turn on add service field to timesheet. So I'm going to come here to timesheet. Show service field is already turned on, and turn on make single time activity billable to customer. That's called allow billable. So that's already turned on and we're good. But this says it's under advanced in the book, but it's under time. I think that's a change in the software that the book hasn't caught up to yet. All right, so we're on to step 2, and we're supposed to create new accounts with related beginning balances. So I'm going to close out of this. I'm going to go to my chart of accounts. And I'm going to create a new account. The first one's going to be a bank account. Detail type is going to be checking. And I'm going to name it checking. And then I'm going to set other, and the date that I'm going to use, the as of date, is 12/31/23. What didn't it like about my date? Oh, it wanted a 4-digit year. And then the balance I'm going to put is 25,000. There that is. And then I'm just going to add all of these. So I probably won't talk through it. I'll just do it. Maybe I'll talk through it because I'm a talker. So we'll do a fixed asset account called furniture and fixture. The detail type is furniture and fixtures. So this one's interesting because there's more than one way to track depreciation, and they don't really tell us how to do it. So I'll show you how I do it. Not everybody agrees with this way. Different accountants do it differently. So I'm going to create this account called furniture and fixtures, and then I'm going to save it. So you'll see now down here under my assets, I've got an account called furniture and fixtures. Then what I'm going to do is I'm going to create another new account, and it's going to be called, it's going to still be a where's that at? Fixed asset account. And I'm going to call it fixed. I'm going to call it fixed asset. I'm going to call it furniture and fixtures still, and then I'm going to call it original cost. I'm going to say it's a sub account, and it's going to be a sub account of the furniture and fixtures account. And then we'll use the amount of 40,000 that's given to us for its original cost as of 12/31/2021. And then one more thing, and this is a little weird, but this is how we track depreciation in here, is we're going to create another new account. And just so you can see, here I can look at the account information. I'm going to create another new account. It's going to be a fixed asset account. And this time the detail type's going to be called, let's see, accumulated depreciation. And I'm actually going to call it accumulated depreciation, or you can just call it depreciation. And I'm going to say it's a sub account of the furniture and fixtures account. And then we're going to say it had a beginning balance on 12/31 of 2023. And we're going to use a negative. So we're going to say if it was $10,000, I'm going to put it in there as I guess never mind. So I'm going to actually edit that. So we're not going to put it in as a negative. No, it's not going to let me change that now. Instead, I'll go to view register and I will edit the entry. So we don't put it in as a negative because QuickBooks already sees it as that because it's a depreciation account. So sorry for the confusion. Instead, it's being silly. So I'm just going to delete that transaction. And then I'm just going to go ahead and again, sorry about that. Again, we're going to say of 12/31/23. We're going to I think what I'd forgotten before is to do this journal entry which is what it was going to do if I had just created it that way. Let's see if we got it right in our chart of accounts or if that's still messed up. Nope, it's still messed up. So there we go. That looks, there we can see the journal entry. And maybe that will do it. Now that's showing that way. Now if we go back to our chart of accounts, there we'll see, and that's correct. So that was really confusing, and I'm sorry if it confused you. In essence, what we have to do is each time we have an asset, we have to create an original cost subaccount to that asset, which shows its original cost, and then an accumulated depreciation, or just you can just call it depreciation or accumulated depreciation subaccount, which shows the depreciation that's already been recorded. And so that will leave us with the book value of the asset, $30,000 there. So I'm sorry that was a little confusing. In fact, the only thing that I really screwed up there was I put the accumulated depreciation as a negative when I was creating it, but QuickBooks was smart enough to recognize it's not a negative. It's just a credit to the asset. So If I had to redo that, I would just go in. I would do fixed asset. I would do accumulated depreciation. Oh, not depletion, sorry, depreciation. And then I would put in the date, January 31st of 2023. And then instead of putting a negative 10,000, I would just put a positive 10,000 there. And that would be the correct way to do it and hit save. But I'm not going to hit save because I got it all fixed now. All right, so hopefully that didn't throw you off too much. So the next account we're going to enter is a long-term liability called notes payable. And so detail type is notes payable and the name is notes payable. Again, we're going to track it from 12/31/2023, and the balance is 60,000. One more wants us to do a common stock. So we're going to do an equity account called common stock. We're going to do it from 12/31/2023, and it's going to be $1,000. Okay, so hopefully we're in good shape here now that we have all of these transactions have gone to the right places. You can see I have $25,000 checking account. I have a furniture and fixtures with an original cost of 40,000 and a depreciation of 10,000. I've got a note payable of 60,000. I've got common stock of, whoops. I think I made a mistake there. I put 10,000 instead of. So again, we can correct that by coming back here. I'm going to put in 1,000. And so that's how you can correct it. Now, if I look at my chart of accounts, should be 1,000. All right. So let's look at step 3. We're going to create 2 new products and 1 new service item. So we go up to here to our gear. We're going to go to products and services. And because we're a new company here, we don't have any products or services yet. That was weird. It like took me to another add page. And the first thing I'm going to add are a product. So it's, let's see, it's going to be an inventory account or inventory product. And it's going to be called Rook 15. Our initial quantity on hand is going to be 10 as of 12/31/2023. Our inventory asset account is this going to be inventory asset. Our sales price is going to be 650. That's what we sell it to our customers for. And our cost is going to be 400. It says our income account is going to be called sales. So not sales of product incomes, but sales. And our expense account is going to be called cost of goods sold. All right. That's our first one. Our second one is called the water hog. Sorry, hit caps lock. The water hog. The inventory on hand is 8 as of 12/31/23. I think I put the wrong date on that last thing. So I may have to go back and fix that. And let's see, inventory asset price is 860. So that's our what we sell it for. And our cost is 500. And our income account is sales. And our expense account is cost of goods sold. All right, so I'm going to go back to Rook 15 and edit it because I put the, if it will let me. I'm just going to change the as of date, right? Because I made a mistake. I think I did it on the other one too. This having a date that's in the future is, I told you not to let it freak you out, but it's already made me make like 2 mistakes. So that's not great. Let me look at the water hog and see what I did here. Yeah, see, I did 12/31/22. So hopefully you will learn from my mistakes. Breaking my brain. All right. Then I'm going to under 3B, I'm going to add a service as well. So I'm going to hit new service. The name of that service is going to be consulting. The rate is 25. The income account is not going to be sales. It's going to be called we don't have that there yet. I'm going to type in services. Since we don't have it already, we're going to add it. And then when we add it, the detail account is going to be service and fee income. And the name will be services. Save and close it. All right. All right, so part C is we're going to make some changes to the following accounts via a journal entry. So I'm going to come up to new journal entry. Unfortunately, not only because I had to do a journal entry to correct the error I made earlier, mine will be called journal entry 2. Yours will be called journal entry 1. The date should be 12/31/23. And we're going to add accounts receivable. Which again, because it's a new company, wasn't in there already. So I'm going to have to tell it that this is an accounts receivable account. Detail types accounts receivable, name is accounts receivable. Close it. So our accounts receivable, remember we're increasing it, so that's a debit. And the money that is owed to us from Blondie's boards. That's a new customer. We'll add them new. We have their name. And that's all we're going to have for now, it looks like. We're going to add a prepaid expense of 3,000. And we'll add new type of account. A prepaid expense is an other current asset. We're going to call it prepaid expenses. Name is prepaid expense. Hit save and close. We're going to add that. Remember, a prepaid expense is an asset. So we'll debit that account to increase it by 3,000. And then accounts payable. Which is a accounts payable account. Add that. And that has a balance of 4,500. Let's see. And then it says we're going to offset it to opening balance equity. So you can see that we don't balance here, right? I have debits of 8,000, credits of 4,500. So to make this balance, we'll do a credit of 3,500 to our opening balance equity account. Oh, I also forgot on the accounts payable, it looks like we have a new vendor that we need to add in here too. They're called Channel Islands. We're going to add them. To make sure I come up here and call them a vendor, or else it gets all confused. I'll hit save. So here we're telling QuickBooks with this journal entry, as of this date, 12/31 of 2023, we are owed $5,000 from a customer called Blondie's Boards. We have $3,000 in prepaid expense, some expense we paid in advance for. We owe a vendor called Channel Islands $4,500, and the difference of all of that should be closed to our opening balance equity account. So we're going to close it, and we've now made our journal entry. All right. Then we're going to close our opening balance equity account to retained earnings. So first thing we have to do is look and see what balance is. So I'm going to go to chart of accounts, and I will see the opening balance equity has a balance of 5,500. Now, if I remember my accounting, I'll know a positive balance in opening balance equity means that account has a credit balance of 5,500. If I wasn't sure about that, I could view the register for that account, and I could see, unfortunately, QuickBooks will show things as increases or decreases and not debits and credits. That's to make it easier for people, but it can be confusing. And you can actually see, I did my original entry here. I put the wrong date again. So those dates really did screw me up. And it did here too. I guess the good news is like, don't feel too bad if you make some errors as you're doing this, because your teacher apparently had a hard time with some of it. Mostly just getting the dates right, because it's weird, I guess, in my brain that that date is in the future. So there you go. Anyway, so all right, really all you had to do there, all we have to do is close it. I was just showing you how we might look at that balance, but we can just look here in our chart of accounts, see that opening balance equity has a balance of 5,500. And now I'm going to do a journal entry. And since that account has a credit balance of 5,500, I'll debit the account 5,500, and I will credit retained earnings. Again, the date 12/31/2023. If I wanted to, I could put a note in here or something saying what I'm doing. I'll close that out. I can double check and make sure I did that right by going back at opening balance equity and make sure it's 0 now. if it wasn't, then I wouldn't like say it was 11,000 or twice what it was before. That would mean I did the debits and credits on the wrong side. So that's one way you can kind of check. So now they want us to prepare a trial balance report, and then save it as a customized report called trial balance. Interesting that they want us to use that date. I'm guessing that the textbook people didn't update it or something. So to do that, though, I'll go to reports. Again, you can see that I don't have reports on here right now. So I'm going to actually, just to make my life easier in the future, I'm going to add a bookmark for reports. So now that will just be there. So I can come over here, hit reports. I'm going to search for a trial balance. It tells us to use custom dates of 1/1/23 to 12/31/23. I think it's actually better for this course to just do all dates, because that will include all transactions we've made in our account. And since it was a brand new account, so that way, even if I screwed up and put a bad date on one of my transactions, doing this would add all of them to our trial balance. So you can do it either way. This brings up a trial balance, and then I can look at it and see if it matches the one in the book. I should have checking. Yep, yep, yep. And so this is actually how I check your homework, because what you're going to do is you're going to save this. So it wants us to customize this. I'm going to put save customization. It wants us to call it trial balance 12/31/17, to which I say, okay, if that's what you want to call it. And hit save. And then just make sure it matches the one in the book. If it doesn't, then you go back and try to find your problem. Okay. The instructions say to export it to Excel. I prefer it if you guys export it to PDF, actually, and then you'll upload it as part of turning in the assignment. The PDFs just come out a lot cleaner for grading. And then it also wants us to prepare and print a transaction detail by account report. So same thing, I would just go back to reports, transaction detail by account. It wants the dates. Well, again, that's weird. It says 1/1/24. Again, I would use all dates for now. We'll run the report, and this will show all the transactions we just made. What's weird is they just asked us to run this report from 1/1/24 to 12/31/24, but down in step 9, they ask us to make sure all of our changes are dated 12/31/23, right? Because that was the date that all of these transactions were supposed to be. So if I had run the report like they said, 1/1/24 to 12/31, there shouldn't be anything in it. Why? Because all my transactions are in 2023. So I think that was another goof up in this book. It's frustrating when the book is wrong. So honestly, let's just use all dates. All right. And that is it. You're going to submit. Again, you're going to export this to a PDF. It says Excel in the book. I prefer PDF. I won't mark you wrong if you do it, whichever way you do it. Okay. But sometimes when you export it to Excel, it doesn't fully export when you save it. And then I get this blank thing, and I can't grade a blank assignment. So I'm going to export it to PDF, and then I will upload it in Canvas to turn it in. So hopefully that was helpful. I'm sorry for a couple of my screw ups making this longer. Hopefully you learn from my mistakes so that you don't make the same mistake. And good luck getting through the rest of this, and reach out if you need additional help.